So I wanted to create this video to provide an overview of this document that I wrote, Special Theory of Machine-Based Automated Communication of Semantic Information of Financial Statements. So basically that's a long way of saying how do you convey information correctly in an XBRL-based report. So if you want to get more details, please read the document. There's the URL, or you can just search on it or go to my blog. This is only going to provide an overview. So the general problem is exchanging information between a knowledge bearer and a knowledge receiver. There are many forms of exchanging information. Word of mouth, book, video. XBRL is another way of exchanging information. There are certain specific things that are necessary for humans to effectively exchange information, and there are certain other specific things necessary for machines to effectively exchange information. So, from a financial report perspective, this use case, I'm not going to read the whole thing. You can read it. You can stop the video and read it. This is basically what's going on. You have an economic entity, or you could have multiple economic entities, like all the public companies that report to the SEC, provide financial information, financial position, financial performance, and they want to communicate that information to an investor. So how do you do that? What does it take to do it effectively? This paper, Toward a Theory of Semantic Communication, provided this graphic. It does a pretty good job of explaining how a sender exchanges information to a receiver. And I created a diagram that was inspired by that first diagram. This is the busy version of it. It has detailed information. It might help you understand the diagram. But this is it's a less busy problem statement. So basically the problem is you have an information bearer that wants to exchange information, and the information bearer and information receiver, for that matter, can extend or change, modify the common shared knowledge, and you have to be able to adapt to that. So the message is the financial report, general purpose financial report, or special purpose financial report, and you have to make this work effectively. So what's going on is the payload of the information exchange is what amounts to a logical system. A financial report is a logical system. To say this another way, a financial report is not illogical, it's not random, it's logical. And there are patterns that you can leverage in these reports. So there are a plethora of ways to describe a logical system or a logical theory. So a couple, logic gates. I'm not sure if you understand how electronic circuits are constructed, but they're basically logic gates. And there's a tool called Z notation, and that is used to describe nuclear power plants or train switching systems in order to design those correctly. But they all boil down to a very simple set of terms. You have models, you have structures, you have terms, associations between terms, assertions between information, the terms, and facts. That's all you need to describe a logical system. I'm not going to go into this. You can read it on your own. A logical system, it has to work correctly. And for it to work correctly, it has to be consistent. You have to have high coverage. You have to make sure everything isn't described in the logical system, and you have to have high precision. You want to make sure that the logical system describes reality precisely. So there are many things that can go wrong. You can have low precision. So in the upper left-hand corner, you have high precision, high coverage. You could have high precision and low coverage. You could have low precision and high coverage. You could have low precision and low coverage. Or you could have low precision, low coverage, and an inadequate language. So anyway, I'm not going to go over this, but this explains, if you want to understand it, what it takes to make these systems work effectively. And this is not stuff that I made up. This is stuff out of knowledge engineering textbooks that I've accumulated and I've rediagrammed to help me and to help others understand this information better. So here's a simple example that every accountant should understand: the accounting equation. So the accounting equation is basically assets equals liabilities and equity. So you have three terms: assets, liabilities, and equity. Those terms are associated, assets, liabilities, and equity, to form a structure called a balance sheet. There's an assertion, like I said, assets equals liabilities plus equity. And you see on the very right-hand side, three facts: assets of 5,000, liabilities of 1,000, and equity of 4,000. And the system that I'm describing here is consistent, it's complete, and it's precise. Here are all the things that can go wrong. Number one is a properly functioning system. Number two, I've left out the assertion, and while the information is correct, if someone were to put an improper value into a fact, the system would not detect the fact that the fact was not appropriate. So, because the rule's not there. Or, number three, the system could be inconsistent. You notice that I have assets of 8,000 and liabilities and equity adds up to 5,000. So the rule, assets equals liabilities and plus equity, it doesn't work out. It's inconsistent with the rule. The facts are inconsistent with the rule. Number four, so it's not necessarily inconsistent or it's not necessarily incomplete, but notice that you have the facts, assets, and equity, and you have the rule, assets equals liabilities plus equity. You know what assets is, and you know what equity is. Therefore, you can derive the value of the liabilities using logical deduction. However, if you provided all of those three terms and the rule, you have what amounts to a parity check to make sure that the system is working correctly. But number five, if you don't report the concept liabilities and you don't have the rule, you can't derive the value for liabilities effectively. Number six, assets equals liabilities. That's imprecise. That's not what exists in reality. In reality, it's assets equals liabilities plus equity. So it's not, the rule's wrong and the facts are also incorrect, even though the facts that are reported do agree with the rule, but it's imprecise. So financial reports have this characteristic called articulation, and it's described in the FASB's SFAC 6 very, very well. It's also described in the IFRS conceptual framework. But basically, the financial statements are tightly interconnected using these concepts, facts, and again, you have a parity check to make sure that everything is working effectively. So there are relationships. However, there is variability in the ways that economic entities can report information. So, for example, this is very common. The line items, property, plant, and equipment at the very bottom, is the same on both the left and the right for economic entity A and economic entity B. But the actual line items that are reported are completely different. You can see for yourself, and again, read the document, but a logical system that tries to describe these things, this situation, has to be able to do so effectively. So you can also create completely new structures. So US GAAP and IFRS, you can report more than is required, and some companies do, to effectively explain the economic entity. But there's only 4 things you can do. You can add a more general idea. You can add a more specific idea. You can add a similar idea, or you can describe a completely new idea. Those are the only 4 things you can do. And the system has to be able to handle all 4 of those situations. So here, you can also move things around, and the system has to be able to control moving things around appropriately. So here you see on the left 2 line items, additional long-term borrowings and repayments of long-term borrowings, being aggregated to net cash flow from financing activities. On the right, you see that those 2 line items net to net cash flow from investing activities. An accountant can pick this up, but I'm giving an example here, and if you have the US GAAP taxonomy that has 14,000 concepts and you have to use the correct concepts to represent information, how are you going to get that correct all the time? So the logical system has to be able to handle that. So here are the different things that a system has to be able to handle in order to effectively communicate when you have the kind of variability that I'm explaining exists in financial reports. So I'm not making these ideas up. All I'm doing is I am observing what other domains do to exchange logical information. And I'm noticing 2 things. Number one, they all use these different theories. They're all systems theory. You use set theory, you use graph theory, you use logic, you use a logical theory or a logical system, you use model theory, and then you have some sort of a worldview. What I've done is I've picked the best practices of all these areas where you have the highest probability of success, the most reliable, the easiest to use, plus the highest expressive capabilities, and that's why I'm doing it the way that I'm doing it, and because you get the best result. So there are many ways to explain these logical systems. On the left-hand side, you see very simple ways like a dictionary or a list or a catalog. And as you move to the right, things get more complicated and more expressive. And a logical theory, you can see, is the most expressive tool that is available. And explained in another way, here is a visualization that shows you the spectrum of knowledge representation and the related reasoning capabilities of an approach to representing information. And you can see where logical theory is in this, which is reasonably high, and you see where a CSV file is, or a spreadsheet. There, it's very low. I mean, you don't have semantics that you're communicating. So anyway, this is very important stuff, and it's covered by Knowledge Engineering 101 textbooks. Business people are not used to this kind of information, but they now need it in our age of artificial intelligence and in the 4th industrial revolution. if you want to explain this, understand this more, go read my document, Computer Empathy. It explains very important background information that helps you understand the moving pieces of this puzzle. So anyway, that's an overview. I would encourage you to read the actual document should you be interested in more of these details. Thank you very much.